Hey guys, hope you're all having a great Thanksgiving. I just wanted to make a quick video explaining some of the mortgage programs I use with my clients to help them get a better interest rate, help with their down payment, that sort of thing. There are a lot of mortgage programs out there, but today I'm just going to be going over the main three that I use. These are very broad, they're going to help you out. The first one I want to go over is for first-time home buyers. Actually only applies to here in the state of Michigan. So this is called MSDHA, MSHDA, which stands for the Michigan State Housing Development Authority. What this is, it's going to be a loan, 0% interest loan, $7,500 to $10,000. That's going to go towards your closing costs and your down payment. One of the great things about this loan is you don't have to pay it back until you refinance or you sell the house. And it's really easy to qualify for. One of the first things you're going to need to do is take a home buyer's education course that's completely free for you. This is just going to go over how to buy a house, things that you don't expect when it comes to home ownership. So with this having first-time home buyers in mind, the home you're purchasing has to be your primary residence. You have to have a 640 credit score, and there are also income limits too. So for Macomb and Oakland County, if you have a single or dual income household, the income requirement is $89,800. And if you have a three income household, the requirement is $103,270. Now there are targeted areas when it does come to this program, such as Royal Oak, Mount Clemens, Southfield, Pontiac, and Harrison Township. So what I mean by targeted is the single and dual income household requirements are not as strict. So if you're a single or dual income household, then your requirement is raised up to $107,760. And for a three income household, you're looking at $125,720. So the loan amount that you're going to get is dependent on the zip code you buy in, right? So some zip codes are 7,500 and some zip codes are 10,000. So with this being a 0% interest loan and inflation happening all the time, what will happen is you're essentially getting paid for this loan because that $10,000 that you borrow now will be worth less in the future when you have to pay it off. So the next program we're going to talk about is Freddie Mac BorrowSmart. This is not just for first-time home buyers, but it is only for conventional home buyers. So the requirements for this are pretty simple, and this program is not state-specific, just to Michigan. So this is going to be dependent upon how much money you make compared to the AMI, which stands for Area Median Income. So if you make more than 80% of the AMI, you won't qualify for this program. But if you make less than 50% of the AMI, you're going to be qualified for $2,500 towards your down payment or closing costs. If you make 50 to 80% of the AMI, you're going to get qualified for $1,250. So the only other requirement for this program is a course that is provided by Freddie Mac for $99. So this last program I want to talk about is called a 2-1 Buydown. This is going to be for your interest rates, not for your closing costs and down payment. So the only requirement for this program is you got to get concessions from the seller. The amounts depends on your loan amount and your interest rate. So essentially how it works is your interest rate is going to be lowered for the first and second year you have your mortgage, and the third through the 30th year is going to be the same that you locked in at. So for example, let's say you get pre-approved at 7% interest rate. We get the seller to give you concessions for this program. Now the first year while you own the house, your interest rate is going to be 5%, and the second year it's going to be 6%. And your third through your 30th year is going to be 7%. Another great thing about this program is that there is no penalty to refinancing. In fact, when you do refinance, the concessions that the seller gave you is going to get rolled into equity towards your principal. So this program is great if you think interest rates are too high right now and you think they're going to go lower in the near future. Just so you can see how much of a difference this makes, if you have a 7% interest rate on a $200,000 loan, you're going to be paying $1,331 a month. So with this program, your first year, you're going to be paying 5% interest, which will make your payments $1,074 a month. And for the second year, your interest rate would be 6% and your monthly payments would be $1,199. And at the start of your third year, your interest rate will be back to 7% and your monthly payments will be $1,331. And at any point, if you want to refinance and lock in a lower rate, you can absolutely do that, like I said before. And the concessions you got from that seller is going to be rolled into your principal. So, those are the three main programs I wanted to talk to you guys about. Like I said, there's a whole bunch more out there, but these are the main three that I see being used all the time, especially in today's market. That 2-1 buy down is very powerful. If you got any questions, concerns, or you want more details about these loan programs, feel free to call, text me at any time. You guys enjoy the rest of your day and have a happy Thanksgiving.